So on today's episode, we're going to teach you how to write off a G-Wagon and save a ton of taxes on... No, I'm just kidding. We have a real good show today. This is the real deal. He's going to go over why that's probably a bad idea and more. You're here. You're finally here. I don't even know where to begin. There's so much we can go over for creatives in regards to taxes. But first, I'm going to intro my guest today. Right. This is the man, the myth, the legend.
Oh, man. Pressure's
Lou
on.
Soriano, CFP. He can explain what he does way better than I can. So, Lou, I'm just going to let you just brief of what it is you actually do for people.
Yeah, so thanks for the intro. Thanks for having me. And I was looking forward to this, like, ever since you asked me to be on the show, because I am new to this for the most part, past year or two, not even two. And one of the first podcasts I ever listened to was Matter Our Visual podcast. So that's a story for another day. And but as for me, I'm Lou Soriano. I'm a CFP, which stands for a Certified Financial Planner. And in my practice, I deal mostly with helping people with business entities, investments, and taxations. And I'd be remiss if I didn't say I am married to my wife, Julie, for 28 years and 3 kids, one of which is a real estate agent. And I have twin daughters who are college students up at Oneonta. So I always got to include the fam in my introduction.
That was an amazing bio. That gave us the whole rundown.
Yeah, there it is in a nutshell.
Yeah, so now we're kind of, this whole discussion is based upon like helping creatives, you know, when they're starting their business, things to look out for with taxes and you know, maybe different business structures and things like that. So when someone's first starting out building their business, what are the first steps they should take in terms of business formation, you know, bank accounts, like how should they structure that? Awesome
question. So my advice always is to, whether you set yourself up as a sole proprietor, LLC, S Corp, doesn't matter, have a separate bank account for your business. Because as soon as you start treating your business like a business and having a separate bank account helps in that regard, the quicker you'll be a little more successful, because you're thinking business minded and you're treating this business separate from your personal expenses and income. So if you get paid from your business, put it into a business bank account. You have a business expense, you need to go buy some gear and a mic, spend it from your business bank account. And then when it starts making sense for tax purposes to be structured differently, I think it depends on how much money you're making in that business. So most people start off as a sole proprietor, which doesn't require much work at all. You just pick a business name. Maybe you go through the trouble of having a DBA. You go to the county and register that. Maybe you're in a business that there's some liability exposure, so maybe you want to be an LLC for that. And then when you start making about $40,000 or $50,000 through your business, it makes sense to be an S corporation because you could control your self-employment taxes that way.
Okay. So basically, once you get to that threshold of about $50K, you should consider an S corp over an LLC.
Yes, net income, meaning after all your expenses, you still are making about $40,000, $50,000. Yes. That's probably when you should be transitioning from a sole proprietor or an LLC to an S corp. One thing I want to mention, an LLC in and of itself does not save you any money in taxes.
I've personally learned this lesson.
Okay, because you know, I don't know why that's out there. There's a lot of things out there on social media, as you know.
We're gonna talk. Let's talk about
if you watch 30-second videos on financial matters, it seems like it's all simple. But yeah, an LLC in and of itself, it'll protect you from liability, meaning that, hey, if I had some legal dispute or something, hey, you could only go after the assets of the business, not me personally. That's what the LLC does. But you can elect to have this LLC taxed as an S corporation, and that's where you could save some money in taxes.
Right. Okay.
Just to be clear.
Right. Just to be very clear, because that is something that took me a while to understand. Right. I kind of learned that on my own research, but at the beginning, everything's so confusing. Like, wait, S corp, C corp, what am I doing? What you know? So, let's briefly dive into social media and how it's kind of misleading a lot of entrepreneurs in general, not just creatives, in regards to finance, in regards to investing and all that. There's a lot of garbage basically out there, and it could be really dangerous for people.
Yes, it can. And it's unfortunate because some of what's being talked about on social media and some of the clips that I'm referring to they're attention grabbers, right? It's like headlines like, hey, form an LLC and just write everything off and pay no taxes, or buy a luxury SUV through your business and the IRS will let you write it off 100% and you never have to pay any income tax on any money you make.
G-Wagon, that's G-Wagon.
The G-Wagon rule, right? And it's like, this is all crazy stuff.
So all right, I love that you brought that up.
Yeah.
Let's break that down.
Oh, God.
Let's break down what that actually is, because people are just throwing it out there so casually, like, oh,
right,
if you want to get a tax write-off of $100K, just go buy a G-Wagon and you're good.
Yeah. So can you do it? Yes. But here's the catch, Matt, is when you see that you could write off 100% of the purchase of your luxury SUV, and I'm not going to name, any particular one. There's a lot of them out there.
Oh yeah, plenty.
And they all qualify. Most of them would qualify. But in order to do that, you have to use your vehicle 100% for business. Let me explain. The minute you use that vehicle for any personal use, such as going shopping, taking wifey out to dinner, running errands with the kids, well, you're not using it 100% for business. These laws were put into play because they wanted, let's say, a construction company to be able to go out and buy a tow truck or a panel truck or a box truck and being able to deduct that from their business. And then luxury vehicles said, hey, we make this sucker 100 pounds heavier, it would fall into this kind of 6,000 pound rule. And I don't want to get into this whole thing, but there is a thing out there called GVW, gross vehicle weight.
Okay.
And I'm not fat shaming anybody's vehicles out there, but that is the marker to be able to do this to begin with. So one, you got to have a business, right? So you can't do this if you're a W-2 employee. Unfortunately, I know there's a lot of people who are high wage earners and they use their car for business, but if you are not in business for yourself, and by that I mean sole proprietor, LLC, S Corp, C Corp, partnership, you can't do this. You can't write off your car. So one, you got to have a business. Two, the vehicle to utilize this 100% write-off strategy has to be over 6,000 pounds, and you have to use it 100% for business.
Right.
Like a construction company would use a tow truck or a panel truck. So it's misleading to say that. And so when people do this, there is a hack to do this, and one of which, and there are some realtors here, we're filming this on Long Island, who use their vehicle to advertise their business. You could wrap your car. You could get these decals, magnetic decals, and put it on there. So you can make the argument that you are using it 100% for business.
Yeah, promotion.
But most people don't want to wrap a G-Wagon, bro. Let's be honest, right? So that's not happening. A lot of us, we all want to flex and have nice things, myself included. I don't own a G-Wagon, but I'm just...
Disclaimer.
Big disclaimer. I drive a Chevy Impala. I'm a simple guy, but... I don't, everybody has their preference, and that's fine. But in order to write off, let's be very clear about this. In order to write off any business vehicle 100% against your business income, you have to use it 100% for business. You have to literally prorate how much you use that vehicle for business and personal, and any personal use is not deductible. So if you use it 50-50, and it has to be over 50%, actually. Okay. If you don't use it over 50%, it doesn't qualify. Okay. Last thing I'll say on the topic, because I just want to cram in all this information. I can't do the 30-second TikTok, bro. I gotta give you everything. I like to separate the facts from the cap.
Right.
You know what I mean?
No cap.
No cap here. These are all facts. So if you buy this business vehicle, use it less than 50%, and you depreciated it, you have to pay tax on whatever you depreciated. If you sell this vehicle within 5 years, because a vehicle for tax purposes has a 5-year useful life. Okay. For tax purposes to depreciate, if you sell it, let's say 2 years down the road, because you got to have the 2023 G-Wagon, not the 2021, well, you're going to recapture that and pay tax on it. Okay. And when you eventually sell the vehicle, let's say even 6 or 7 years from now, if you sold that $100,000 vehicle for $30,000, you have a capital gain of $30,000. So it's never tax free, bro. It's never,
you're just deferring it, like you're just pushing it back.
Yeah,
basically.
And for realtors out there who might be watching, because I have a lot of realtors who follow me, they understand 1031 exchange when it comes to rental property. You just defer, you buy another property. Well, these rules kind of fall under 1031, believe it or not. It's just separate rules because this is personal or mixed-use property.
Okay.
But hey, there's no 100% write-off, free ride, free G-Wagon from the IRS. It doesn't really work that way.
Okay.
Not exactly.
Okay. All right, that was a very thorough answer. That's going to make a great micro clip right there.
I hope so.
Not for TikTok, though. Not for TikTok.
Not made for TikTok, no.
So, going off of that, what are some tax strategies, I guess, young entrepreneurs or creatives can do? Because obviously to write something off, you also have to be making money, or is there a certain, I guess, does the IRS give you a grace period from when you start your business until whatever, year 3 or something? Right.
So when you're starting out as a business, some people have a 9-to-5, right? So, but they're starting a business. Let's say I wanted to be a content creator, although I am nowhere near as talented as a matter of visual, but I learned a lot from you.
He's really good.
I've learned a lot from you, thanks to you. But let's say I wanted to do this as my side hustle, I have a 9-to-5 and this is going to be my thing. Well, I'm buying gear. I'm buying cameras and lights and microphones, but I have a loss. I haven't made any money doing this yet. So if I have that loss, I could deduct that loss against my 9-to-5 income. But let's say I went head first and didn't have any other income. Well, you can still deduct it, but you could only deduct up to taxable income. So if you made no income and all you had was expenses, well, that's all you had. The IRS, unless you are incorporated, you can carry forward some losses. But most people don't start off that way. They don't start off with corporations and LLCs. They just, how do we all get started? We just hang a shingle is the old saying, and you start a business and you start word of mouth and getting clients, and then you progress to that. But early on, you just kind of could deduct losses against earned income.
Okay.
Yeah.
I like that. I love that. That again, things that I had to learn along the way. And I just hope that this content gets out to somebody that can hear it now and save them a bunch of headaches with their income and their taxes and always pay your taxes, please.
Yes, and consult with somebody. I think it's a good idea for creatives or anybody in any type of business to watch videos and podcasts, but also get on the phone with somebody who's knowledgeable, either in your field or speak with a financial professional who's willing to explain some of these steps to you, because it'll save you a lot of time, even if you pay a fee to consult with somebody like this. It's going to save you a lot of time and energy.
You have to. You must. It's crucial for your business.
Yes.
So let's get into the investing side of things, right?
Okay.
A lot of creatives do not have, maybe they don't understand how to go about it. They don't know if, I don't make enough money to invest in retirement, all those things. And usually when you have a 9-to-5, your W-2, you can go into their retirement programs, and they have different things.
Right.
But as self-employed or, entrepreneur, how do we attack that, so that we're good when we're old and ready to retire?
Right. Another great question. So first off, I just want to put out another disclaimer, right? While I'm a financial professional, I might not be your financial professional. So it's very hard to give any specific advice. But what I would say is always begin with the end in mind. And if there's one thing that you can never get back, it's time. So as soon as you're starting out as a business owner, self-employed, even if this is a side hustle, you should start thinking about having some money set aside for a retirement plan, for example, because especially retirement, because it's one thing we all want to do, right? We all desire a time in our lives where we don't have to work necessarily, but we have some money saved up. And it's also going to help you on your taxes. So anything you put into a retirement plan could potentially be deductible against any business income you have. It's a legitimate expense, a legitimate deduction. But how do you get started? It's very easy. You could work with a financial planner like myself, and there's many others out there, or you could even set up accounts on your own where you could just, start investing $25, $50, $100 a month, open up an IRA, or there are different business retirement plans out there too, and just get started that way. But I say start. That's the number one thing. Start, even if it's a small amount, and speak to somebody about the best plan that might work for you and your business.
Right. Okay. Thank you for that. So that leads me to my next question. Now, in your opinion, what percentage of income should someone be throwing towards, these retirement investments?
Yeah.
Of course, there's different things, right? But in your opinion, like what percentage of income?
That's so hard. See, that's hard too because I always like to pick. Well, let's break it down two ways. I know we're making this mostly for the self-employed. We're trying to speak to them and the creative folks who follow you, but for my employees, my 9-to-5s, I always tell them if you have a 401k or 403b, 457, any sort of retirement plan through your employer, and there's some matching component, put that in. So in other words, my employer matches me 5% of my salary. Well, then start with 5% because you're going to get 100% return on your 5% because they're going to match you. Right?
Okay.
So start there. Now, you're self-employed. Listen, man, it's hard getting something popping out here. If you're starting as a self-employed person, every dollar counts. But at the same time, like I said earlier, you don't get time back. So you're going to realize that, hey, that couple $100 that I was putting away that first year when I was like just getting going is paying dividends 4 or 5 years later. And I'm glad I started earlier. So when you're self-employed, it really is different. But I would say at least 5 to 10% of every gig you make some money off of, every commission check, you really do have to set aside some money for that, and taxes too. That's another story.
Yeah, that's a whole other.
Yeah.
What's the general rule for taxes, like setting aside in terms of like
30%? A lot of people are going to be shocked by that number, but it's 30%.
That's what I was doing when I was. Before I did the S Corp thing, that's what I would do. I would always set aside.
Yeah, it's and that's the thing, and that's why people start asking about, hey, how much could I spend on a luxury SUV because I'm going to pay all these taxes. I didn't set aside anything, and I don't want to give it to Uncle Sam. I'd rather buy a vehicle or something like that to offset this. Not always the best strategy, but it's usually 30%, and here's why. I'll break it down pretty simply. Your federal income taxes for most people, give or take, their effective tax rate, not marginal tax rate, meaning what you actually wind up paying of your income, is about 15%, up to about $100,000. Then you have self-employment taxes, which is 15.3%. Let's just call it 15. That's 30 right there. We live in New York State. Let's call it another 5%. You're at 35%. So I tell people 30%.
So crazy, man.
It is crazy. It is crazy.
I don't understand it.
It's tough. That's why everybody's leaving New York and going to Florida.
Man. Or Texas.
Yeah, but one thing I'll mention about the self-employed, you really don't own a business until you have these things in place. Until then, you just own a job. And here's why. Because we talk about the people with a 9-to-5 all the time and how no, I want to be my own boss. Well, if you're your own boss, you really have a lot of bosses. Every one of your clients is your boss now instead of that one supervisor at the job, right? Number one. Number two, people with 9-to-5s, they have all these things in place inherently through their employer. They have insurance. They have life insurance, health insurance. They have a retirement plan, and they have their taxes withheld. When you're self-employed, unless you're doing all these things for yourself, you don't own a business, you own a job.
Right.
My opinion.
We can go. That could be a whole conversation all by itself.
That's another episode.
Yeah, we can get into the whole E-Myth thing and just.
Let's do it one day.
That needs to be. Yeah, that's the next podcast.
Okay.
How social media has impacted you, because
we
got all the boring legal tax stuff out of the way, right? But it's very important, crucial stuff we spoke about.
Important stuff. Yes.
But I want to know more about how you have leveraged social media in the past, year and a half.
Okay, so it all started with me with 2020 and the pandemic, right? The world kind of shut down, and it became easier for me to make video clips and share those video clips about all the different programs that were going on at the time. PPP, EIDL, stimulus checks. Everybody had a lot of questions, and I couldn't just call everybody or email everybody. I'm an older guy, I'm 53. I was used to emailing, and then I started following my son's colleagues. My son's a realtor, and I see how all these realtors are using Instagram, specifically Instagram at that time, to promote their businesses and stuff like that. So I said, the light bulb went off. I'm going to make videos, post them on Instagram. And that's how I started, just with my cell phone. And then I started watching these different realtors, and I got turned on to you and Charles Weinrob. And I saw the work you guys were doing. And I think literally one of the first podcasts that I saw was of Handsome Homebuyer, Charles. And it was with you on it. Like, you guys were sitting on the sofa.
Funny.
Talking.
Yeah.
So I didn't even know what this guy did at the time, right? But he was just talking about, like, hey, Matt, let's talk about how social media, I started with X amount of followers. I have this many now. Yeah. And I was just like, wow, again, another light bulb goes off. So then I said, I got to reach out to this young Matthew, which was Matt R Visual. And I started contacting you, and then I consulted with you, and then you upgraded. I think my budget was $800 when you asked me.
No, that
was
budget,
it 500? It might have been 500.
We had to push that budget up.
Okay, but Matt, if you remember, and you came to my home office, right, and to my office, I literally had a cell phone and like one of those little dingy ring lights,
little holders with the light on.
It was horrible. It was horrible.
Like a $10 Amazon.
And then you said, Lou, this is not going to work. And I said, well, how much would it be to get set up right? And you said, well, what's your budget? I think I said 500 or 800. He was like, no, that's not going to happen.
It's not going to happen, bro.
I'm not your guy. But once I realized, and I started asking you just simple questions, like how do you put text on top of a picture and a video, and and then I actually hired you to consult with me, or I wanted to consult with you. Like, hey, no, I want the right setup. I want lights and this and that. Yeah. So I kind of upgraded it, but I don't have somebody film my content, but I have a good camera now to film my own content when it comes up. And I use a whiteboard. I'm an educator, kind of inherently. I like to do that. So I'm spontaneous with the content I put out. If I had a situation with a client and I think it would be of value to other people, I'll just go to my whiteboard and I start making a video with my Sony Alpha camera that you got
Sony,
me,
baby,
and my
Team Sony,
and my other gear that you recommended.
Yeah, so I love that. I love, because I know when something like, I know you, so I know like when something occurred recently, you sometimes just jump into stories and like, listen guys, if you're filing, make sure you do X, Y, and Z. So that's what I like. It's like that real time update of what's happening, especially around tax time.
And it's crucial for me in my business because it takes time to do the work you guys do. It takes time. The editing, and that's one thing I could say. For people who think it's easy editing your videos, I make very simple videos. As you know, I go like one cut. There's not a lot of piecing stuff together, and I do that intentionally.
Not so many takes either.
Because, man, the editing thing is hard. And then if you want to put out a good product and good information, I just recently made a video about writing off your business vehicle, and I didn't like the way some of the things came off. I was trying to edit. I was like, man, this is hard work. So one thing I would say out there for aspiring content creators who do-it-yourselfers, it's a lot of work. It is a lot easier to put that on guys like you.
Oh, yeah. I mean, shameless plug. No, but there are people that, enjoy the process, such as yourself, that they just need that.
I do.
They need that nudge. They don't have knowledge of gear or how to implement it. But once they learn that, then everything else is sort of seamless.
Right.
But I would say the large majority of people, especially in your demo, especially like they're not as savvy as you are. And that's where I would come, someone like myself, comes in.
Well, and you got to be creative. And creative isn't just like having something interesting to show on social media. Like, social media is a funny thing. Like, you look at that guy, I think his name was Dogface, the guy with the skateboard and the cranberry juice. That was just like a viral thing. He was literally just making a video for himself.
Over the pandemic, right?
Who knew that was going to happen, right?
It's crazy.
But then you go the whole spectrum, and I like to use, when I talk about social media and the directions you could take it, you could be the Island Boys who are popping right now. For what reason, I don't know. They're whatever. But you could go that route, or you have guys like, Earn Your Leisure, Rashad and that crew, and they're trying to teach financial literacy. And they're a young group of guys. Yeah. So, and you have everything in between. So I think it's important to, when you talk about being creative, think about how you want to come off on social media. Pick a lane. And then for me, I like teaching people about things. So that's kind of like my lane and my little whiteboard videos.
Yeah.
But you also got to be personal too, right? You got to be the same person in real life that you are on social media. I think that's important. I met some people, not the case sometimes. And also just be genuine, man. Always come with like value first, and then money will follow, and everything
100%.
else, the follows, the money, whatever it is you're after, that'll come after.
Now that's all right. So you just sparked something in my head when saying value first, because I mean, let's define that real quick, right? Because there's been times, and maybe it's happened to you, where people have kind of like swindled me for free consulting, right?
Oh yeah.
You know what I'm saying?
Yeah.
Because like I am that type of person. Like I love to talk. I love to help people. I love to like
Me too.
explain things to people.
But there's limits.
So sometimes you get caught off, and then you realize, wait a second, this person just called me 4 times.
Yeah.
I spent an hour each time. Wait a second.
It adds up. It adds up.
So how do you mitigate that? Like how do you
It's
how do you
hard,
try
right?
not to? It's hard, right? It's
Yeah,
difficult.
it is hard. Sometimes it's very hard. It's like I remember making a video recently, and we have a mutual friend, Sean Waller, and I talk about free game all the time. In fact, his podcast is called
the free game.
Free Game Podcast. Tap in. But free game isn't always free, right? Because although I might be talking about a topic on my videos or on social media, for me to acquire that knowledge was not free. Right. I went to school. I'm spending time to be good at something. Sometimes it's very boring. I'm reading a lot of stuff. I'm just talking about me and my business. Same thing with you, right? You're reaching what's the best camera and all this other stuff.
Staying on top
People
of things,
don't understand that stuff. So if I make a video or you do and you share some free game, doesn't mean it came necessarily free. We invested time and money to understand this topic, to explain it to you in a way that's very easy to understand and digest. But once you want to know something past that,
like custom.
That's when I think, then it's appropriate to say, and I knew that when I first met you too. I remember saying, hey, Matt, you got to send me a bill or something, because I'm not expecting you to do this or nothing. And, I'm hitting you up now, and now you actually came and visited me, and, we've done some things together. That I knew were going to be billable. But when it came time to hey, I'm just picking your brain over and over again, it's like, oh, bro,
it was,
send me a bill. I'll feel better
and I respected
about
that 100%, because again, I've been in scenarios where it's like, I've been on several calls with people, and I've learned since then, but literally giving out gear suggestions, all that, I'm like, and then they don't book, or they don't, they ghost, they're gone. I'm just like,
well, it's tough too, Matt. When you're starting out, sometimes you do have to do some things for free, or sometimes you do have to do some things.
100%.
So, just so anybody who's listening to this, who's just starting out, you really are not in a position to turn down anything. You got to take whatever comes your way and then build from that.
100%.
But I think it's also for the customers out there, you shouldn't really take advantage of those situations too. You could identify when somebody's starting out, and if you want to really give them the opportunity, compensate them.
Exactly. And I've always preached that. I'm like, listen, if you're I always tell young creatives, listen, I understand maybe you don't feel confident charging a lot of money for your services, whatever a lot of money is, higher premium, whatever.
Yeah.
Just charge what you feel comfortable with. You know what I mean? Don't feel like you're getting the shit end of the stick.
Right.
I was on a coaching call yesterday actually, and that was the theme. It was like, he was going through the motions with some people he's been doing work for, but the vibe that I was getting is, not saying they're doing this intentionally, but it was kind of like one of those off balance a little bit. The situation was like,
it's hard.
Not that they're trying to take advantage, but it's like borderline. You know what I mean?
Yeah. Well, that's
but part of that comes from us as creatives and entrepreneurs. We have to speak up for ourselves. We have to kind of draw that line and first you have to figure out what the line is, right? Like what's your bare minimum of going out, leaving your house to go do something? Like what makes sense for you in your current scenario, right?
Yeah.
So someone who the guy I was talking to yesterday, he was much younger than me, but his scenario is much different than it was when I started my business. So the way he has to move is a little different. Versus when you have a kid and you have to it's very different, right? And even then when I first started, I was still keeping it humble. I wasn't trying to, I couldn't go high premium rates because I still needed to build myself up.
You're still building up.
But at the same time, you're like, damn, I have family, I have these things going on.
But even if you didn't, when you start realizing that maybe you didn't, you kind of cheated yourself. And again, you have to do this sometimes when you're starting out, or almost always, is when you come time for taxes, right? And you see a guy like me, and it's like, okay, I didn't realize I made, let's say 10,000 this year, something really low, even 20,000. It's like, oh, you do realize you have to pay taxes and federal taxes, self-employment tax. it's like, you have the money. So no, like I was living off of this. Like, that's when you realize like, hey, I didn't factor some of these other things in. So,
that was me year one, man. I made under 40K my first year.
Right.
First year, and literally had no, like at the end of I almost got money back. Like that's how bad it was. Like, right. But according to the IRS, of course you could take losses, especially earlier on in your business. Of course. But I just say that to say it to your point, like, like you look at the end of the year, like I was panicking because I was like, yo, I did all the math. I'm like, yo, I didn't make, I really didn't come out on top this year, And I was kind of hard on myself. But in hindsight, it was like, it's okay, to be in that position. You have to build yourself up.
It's you got to build yourself up, and you got to understand whatever business you're in, you have to justify your rate too. So if somebody says, hey, that's too high, you got to be ready to say, well, no, like if I prepare a tax return for somebody, I know what the prevailing rates are. If you went to a CPA, if you went to like a tax preparation service that's on every corner. I don't want to name names, but you know what I mean.
You want to name names.
Yeah, but seriously, you have to know what the competition is out there, and then what you do and what you bring to the table. So when I explain to people like, hey, I charge X for a tax return, but there's more that comes with that.
Right.
Anytime you have any question, you could call me. I'm here year round. I'm not just here from January to April, and then I lock my doors until next year, and that sort of thing. And I offer other services. So, so for young entrepreneurs out there, young content creators out there, I would say, have a menu. Something I did early in my career was and I got this idea from somebody else, so I can't take credit for it, was have a menu of services. Where you say, hey, if you're a content creator, for example, I do photography, headshots, video, social media management. So when people then see the value that you bring, and they might think like, oh, I just thought you did videos. I didn't know I could have a headshot done with you. I went to somebody else to do that. So having a menu of services, I think, is very important early on. And then knowing what the competition or what the market charges for certain services like that. And of course, if you're young, you want to charge below that. You're trying to get, your business going. So that's how you know what to charge, not just how much you personally need to get by this week.
Yeah. So I'll jump back to that point. So it's kind of like a hybrid of that, right? It's a hybrid of figuring out what you need versus up against the market too. Like not just making up stuff and going, oh, well, why do you charge it $10,000, but this guy does it for $5,000? Like what?
Yeah.
Like how do you, so, but it does get weird like that in the creative field where, you have to, at the end of the day, you have to be able to justify in a sense what you're charging. And not that you have to like line item everything, like, oh, I spent X amount of time. Right. Which is how I charge. I don't really go by like, I don't do hourly stuff. Like I'm not like, oh, this is how much hours, because the way I price actually, I don't want to say compensated. I'm kind of like built into, because everything goes overtime.
But you've been doing this long enough to understand that.
There's no such thing as like, we're going to just shoot for 2 hours to the dot, leave. Okay. And the edit's only going to take me to the dot, leave. There's going to be no revisions. You're not going to change anything, right? No, it almost never happens. So I compensate for that up front, so that I'm not on the back end trying to nickel and dime my clients.
So your business is pretty unique, being a creative person, like a musician. And what you said just sparked something. So I'm a huge Beatles fan. I'm a hip hop kid from like the 70s and 80s, but oddly enough, I'm a huge Beatles fan also. So there's a documentary about the Beatles on Disney Plus. Shameless plug to them. But I think every creative person, whether you're a musician, an artist, a content creator, should watch this, because you get to see the process behind the scenes. So like you're saying, it's an hour video shoot, but you're going to spend 8 hours editing. The amazing thing that I took away from this documentary is, and you don't have to watch the whole thing, just watch like a half hour of it and you'll see what I'm saying. Everybody knows one or two Beatles songs, no matter what age you are, what type of music you like. But when you see them during that time struggling to come up with the lyrics and what instruments to use and how to certain things and just little nuanced things, you get to appreciate it. And I was watching this thing getting frustrated saying, oh my God, the song goes like this, because I've heard it a million times. But they were just creating it at that time. and they spent 8 days coming up with that one line for that song.
It's crazy.
But I mean, that's a dramatic example.
Yeah.
But what I'm saying is, we all love the end product,
right,
but we don't appreciate how much time goes into developing that
exactly.
end product. And that's everything from a video that you might produce, a song that musicians might make, or even a tax return that somebody in a boring profession like mine, although I like it, but some people might think it's boring. It's like, no, I like understanding the nuances between when you can write off a vehicle 100% or not, and what happens if you do this and that. But when I do your tax return, you don't know that I spent hours and hours and hours and years understanding all these little nuances to give you that product.
Yeah, and that's across everything too, right? Especially like sports. Like you train that one, or even dancing, like you train that one move, that one shot, you know what I mean?
Yeah.
So the crowd goes crazy when they hit the 3-pointer, but they have no idea how many times they've trained that shot,
Exactly.
So you're only seeing the end result. You're only seeing the good side. You're not seeing the hours of pain.
Exactly. and going back to the Beatles documentary, and I'll end it there, or end it here, is you have to do a lot of boring things over and over and over again to get really good at something. That's what the other thing that struck me was, like, you can't give up. It's like you just have to keep working it out, and then you have a signature.
Yeah.
It's like, oh no, I know who made that. Like, I could watch one of your videos and I know you made it. Really? And I could.
I guess I'm blind to that because I'm.
No. You can tell. Just like, there's certain musicians like Carlos Santana. The minute you hear one lick of the guitar, that's Santana playing.
Definitely.
So this is what I'm saying. But like, he developed that style, or Jimi Hendrix, or there's just so many things that we develop our own style, our own take on it, and then it becomes identifiable with us.
Yeah.
But it took hours to develop.
It took a lot of trial and error.
And years.
Yeah.
I keep saying hours. It really isn't hours. It takes years, to get to that point.
100%. And it took me back just to when I was competitive, like dancing competitively.
There you go.
And it's you don't use like a move on the first iteration. You play around with it. You figure it out. You make like 5 different variations and see which one feels the best, or like has the best response.
Yeah.
Like it's crazy, dude. Like, it's just crazy.
So again, coming from that era, so I was around when hip hop was just starting. I just gotta, because you might. Okay, listen, guys, this video might be longer. We might have to edit this down some. But listen, I remember when hip hop was just starting, and at that time, you were either a graffiti artist, you were into music as a DJ, or you were a breakdancer, and like, it was just such a. Talk about a creative time. I mean, late 70s, early 80s, it was an amazing time to be around. It's kind of sad to see some of the mumble rap and stuff of it, and how they get there, how highly compensated they are, and then you got people like the Cold Crush Brothers and Grandmaster Flash and all these other guys.
Yeah, but they were just so early, that's the issue.
I know, but that was in its rawest form. Like, I went to high school in Brentwood, and I was in high school with EPMD. Like, literally, you're in class with people who are on the radio or on MTV, MTV Raps after school, and you're in the same classroom with them, or
so they're from
Craig
Long
Mack.
Island. I didn't know that.
Yeah. Craig Mack is another one. K Solo from Central Islip. My good friend Kenyon Smith, DJ 4-5. He's still out there. He's a DJ for Drake and Lil Wayne.
Wow.
I mean, it was just an amazing time. But back then, it was. Now, like, you make one lousy record, you could be the Island Boys and be a millionaire. Sad.
Is that a fact? Are they probably got some type of.
Listen, I see them with stacks, so I don't know what they're doing. But there again, social media could
TikTok,
be very.
All that, bro. It's
don't believe everything.
Mirrors, man.
Yeah, you don't know.
So crazy, especially in the finance world. That's what I've been seeing a lot lately. Is like so much. So there's a lot of millionaires out there. All of a sudden, everybody's an Airbnb millionaire. Everyone makes $100K a month off of their properties. It's like.
I know it's crazy, and the thing is, it can happen. It's just very few are able to pull that off to that level, and I think we start judging ourselves if we feel like, well, if I can't do it to that level, it's not worth doing.
Dangerous, super dangerous, man. Because I've even got caught up in that trap a few times. Where I'm
we all do.
It's like, yo,
we all do. I do too. I'm 53. I still from time to time like, man, like I could have been doing this sooner, and It's like, yeah, that's
No, I've learned not to think
not
of
me.
it like, yeah, you can't think of life like that about sooner, because hindsight is 2020, right? Like, if I knew that what I know now 10 years ago, of course I'd be in a different position. But then the experience that I had over the course of the years has helped me to where I am now, and how I see things, and how I execute my ideas, my goals. So I think that I have no regrets in terms of like, in terms of that. And like, you can't be mad. Like, we're living in a different era. Just like, well, right now people are looking at you or me, or like, especially my generation. I grew up, I saw the advent of like the internet. I saw, what a I knew what a payphone is like, you know what I mean? At the very, very tail end of that. But, just seeing the transition of technology and how it's been used. And, like, for instance, my dad's probably like, my dad doesn't even know how to use a computer, to be honest with you. And I'm just like, dude, like, you got to figure this out.
It's a necessity.
Yeah.
But that's the thing. Social media and technology, for that matter, it cuts both ways. You know, it's a necessity, but you got to, again, I go back to, how do you want to use it? I love social media, but I think it's a little toxic at times. It is. And that's why I decide to use the medium in a way where I'm just like trying to share information and educate. I'm not trying to entertain you. Although I hope you are entertained because you're learning something, but not like, doing some goofy stuff or, whatever, go viral or doing some nutty stuff.
I think we might have something in this meeting right now, this episode right now, that we could chop up.
Okay. Well, let's see. And that's fine, but that's not the intent.
No, it's not the intent.
Right.
However, but I feel like with all this mixed messaging about the G-Wagon write-off, perfect example, there needs to be like countermeasures to that, right? People talking about the realities of that. What happens if you actually go and do that and you get caught and you get in trouble because they're not giving you the whole picture of that.
Matt, I literally see stuff, especially when it comes to financial matters, right? And I'm not saying I know everything. I don't. I'm constantly learning and researching myself. But there are certain things that I see out there that I just know for sure, or like I almost want to take the time. I just don't have the time to like do, like we were saying, facts versus cap, right? Like here this person is like, okay, here's what they said. This is what's true about that, and this is what's not true. Because there's always some truth to it. So I'm not, knocking them entirely. It's just that it's misleading and it's unfortunate that they don't give you all the details.
No, of course not.
So that's where the final point is.
It won't be hot. It won't be a hot topic. It won't be sensational.
No, and then unfortunately too, you can't keep people's attention for longer than 30 seconds and 60 seconds because we're conditioned to get all of our information and make a decision or judge people based off of how long we scroll or choose to watch their video. And even if you thought it was compelling, these platforms only give you 30 or 60 seconds to get that message across. So they just hit you with boom, 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 and then people just run with it.
Yeah.
Not enough time.
No, not at all. So Lou, I really appreciate you coming out. Tell the people how they can find you, how they can reach out.
Yeah, and thank you, brother, for having me on. We, although we're doing this for the first time across from each other, we're friends outside of this, and I was excited to come in. Again, I want to thank you for helping me get started on this whole social media journey. If not for you, I definitely would not be doing a lot of these things. But how to get in touch with me, mostly Instagram. I'm pretty active there, Lou Soriano CFP. And if you want to reach me directly, my office number is 631-236-5842.
Awesome. Thank you.
Thank you, brother.